We actually took some positions in emerging markets because we think all the rhetoric and all the fear around Donald Trump and tariffs. It's funny when you hear people just sort of take him at his word at, oh my God, he's going to put 60% tariffs on China or whatever. And then they panic. And then you figure out, well, he's a businessman. And you've already had 4 years of this where that's a starting point in negotiation. And where you ultimately end up is typically a lot better than that. So to your point, if you look at the relative valuations around the globe, yes, on a going forward basis for 12 months, the S&P is sitting at about 22 times or so. But if you look at some of these other markets, you've got the Nikkei sitting at about 19 times. You've got the Indian stock market sitting about 20 times. But the China stock market is sitting about 13 times. So a lot of these other markets have underperformed for the last 2-3 years. They're very cheap for obvious reasons. People are afraid of tariffs coming out of President Trump. But I think to some degree, and you saw that with some of the moves since the beginning of the year, is maybe they're a little bit overdone. And so that's where I'm looking, because the valuations, to your point, as you brought up, are a lot more compelling there. And then also in the US, the markets have really been driven by 7 stocks, the Magnificent Seven. And I think there's going to be an AI digestion phase. And we've been writing about this now for several months. And you're seeing signs of it from some of what Microsoft has said over the past month.